In today's video, I'm going to share with you how I combine TSLY with Crash to not only live the FIRE lifestyle, but to perhaps print risk-free money in the process. TSLY and other Yieldmax funds help us earn around $300,000 per year in dividends, as you can see below, and our performance value shows that we're up 18% for the year, beating all of the indexes. The S&P is up 8, the Nasdaq's up 9, the Dow's up 3, and the Russell is up 1.5%. So again, we're beating all of the indexes on a year-to-date basis using Cornerstone, Yieldmax, and Defiance. These funds help us live the FIRE lifestyle, which means financially independent, retire early. If you need help doing the same, email me for my e-guides at aikentod48@gmail.com. Also, we are down 4,000 today, or 0.44%. This is to be expected when Cornerstone has been so strong the last few days. So the Nasdaq was down 0.10% today, and we're down 0.44%, which again is to be expected considering how strong Cornerstone has been the last few days. Also, with this margin debt that I have, this $305,000 in margin debt, which was just $315,000, but we got our dividends from Defiance last night, so now our margin debt is down to $305,000. Well, you would think on a down day I'd be down huge, but on down days, as you've seen from past videos, we actually outperform on most down days because Defiance goes down less than the market on down days. Cornerstone's usually very conservative, and I keep small amounts in Yieldmax so they don't take me down too much. Now, when speaking about TSLY, you want to protect it with Crash, or you can just not buy so much of TSLY and watch your position sizes like me. I don't ever worry about Yieldmax positions hurting me because I keep them small, but I have been increasing my TSLY exposure lately just because Tesla does look bullish on its chart. It's at support here, as you can see. It's at the 2021 consolidation level. It's at 2023 lows. So this looks like perhaps you could say maybe a triple bottom of sorts, and it looks cheap. So I don't really want to short here. If I was going to short, you might want to try Crash, CRSH, because Crash also gives you dividends. So TSLY gives you dividends of 50%. Crash gives you dividends, I hear maybe around 30%. So this gives you perhaps a risk-free way to make dividends, because if Tesla goes down, obviously your Crash will benefit. If Tesla goes up, if you keep more in TSLY than Crash and you strangle it, you're going to make more on the long side than the short side. So Crash makes sense, just not right here in my opinion for Tesla, because we're at the lows for Tesla. Now let's go explore one thing for Crash. The important thing to look at in TSLY is the maintenance when trying to live the FIRE lifestyle. TSLY is 50% maintenance. Now if you go to Crash, CRSH, you'll find that it is also 50% maintenance. That is very advantageous for a short because most shorts are 100% maintenance. TSLS, the Tesla short, let's go look at what that maintenance is, and that is 100% maintenance. So maintenance is the secret to living the FIRE lifestyle. Maintenance is how we preserve so much equity and also have margin. So we have available withdrawal here of over 200,000, and we have margin debt of 300,000. So the reason why I'm not in margin calls is because I can withstand over 20% corrections in the market and still withdraw freely out of my account. I can swipe my E-Trade credit card and go wherever I want in this world. I can buy cars, clothes, shoes, whatever I want with my margin debt. So the key to having this margin on and not experiencing anything close to a margin call is maintenance, okay? And TSLY is 50% maintenance, TSLS is 100% maintenance, but Crash is 50% maintenance. So I'm going to be using this to my advantage to not only protect my TSLY position, but to squeeze more available withdrawal out of my account and live the FIRE lifestyle. If you need help understanding maintenance, that's in my Volume 3 e-guide. So Crash 50%, that's very attractive when you're trying to explore short options for Yieldmax funds. TSLS, once again, was 100% maintenance, but I don't want to be buying Crash, as I said, here at the lows. Also, you don't want to get caught in a short squeeze with Tesla, so this thing could pop at any minute, Tesla, and you don't want to be short at the bottom once again. So you want to avoid short squeezes with something like Tesla. It can really move up fast, and you want to be careful with your short positions as a result in Tesla. The other reason why I don't need much of a short with Tesla is because the dividends pay back Tesla over time. So even if Tesla has been losing this year, which many people have been complaining about Tesla, well, for me, it has a 56% dividend, Tesla does. So even if you lose in Tesla short term, if you just hold this for 2 years, you're going to cash flow your investments over time. So So 100% payback in around 2 years for Tesla, even if you're down on paper, even if it goes down, the share price goes down and it has to do a reverse split. Well, the dividends stay approximately the same because splits don't change dividends, as we know. But Tesla still has really high volatility. So as long as the volatility is high in Tesla, well, then our premium should remain high in TSLY, and our payback period should be about 2 years, since 50% in 2 years is 100% payback. So for 3 reasons right now, I don't really need to short TSLY much. Its dividends will cash flow its losses over time in 2 years. It's at the lows on its chart, so you might not want to be shorting near the bottom here. And Tesla is a large part of the indexes, so I don't mind owning Tesla. Whatever it does, I go with the indexes. I live and die by the indexes. As long as I don't keep too much of Tesla in my portfolio and I match it to the percentages that it is in the indexes, well, then I'm fine with Tesla. Tesla is 2% of the NASDAQ, as you can see here. So as long as it's no more than 2% of my portfolio, then my portfolio won't see large drawdowns if Tesla is down. Now, Tesla was down 3.5% today, so Crash worked well for us. I can already see the strategy paying off, but again, I don't want to have too much in Crash when Tesla is around yearly lows. And I can't state this point enough. I don't keep enough in Yieldmax stocks to lose. I keep most of my money in the indexes because I like to compound my gains with the indexes, and stocks can have a mind of their own. They can fall by 10 to 20% in one day. They have headline risk. The indexes don't. That's why I park most of my money in Cornerstone, which is a 4-star fund. Cornerstone, it goes sideways to down on its chart, as you can see here, but you have to factor back in dividends, drips, and rights offerings. Cornerstone has a 21% dividend that it sets at its NAV every year, and then it drips that dividend down at the bottom for free money every month. Also, you can get 20 to 30% premiums in Cornerstone each year. So that's upwards of 50% gains you can receive in Cornerstone if you play it properly. But again, you have to time it around its rights offerings, and that's in my Volume 4 e-guide if you need more help playing Cornerstone. Cornerstone's also 30% maintenance, so this is why I put so much in Cornerstone. When you buy my e-guides, Discord access is free for life, and this is where we alert you of the Cornerstone rights offering announcement. We also have almost 1,000 members here in the Discord chat room pursuing the FIRE lifestyle who can help answer any questions you may have about your brokerage account that I can't answer. After all, E-Trade is not the same as other brokerage accounts. Some brokerages don't have Cornerstone or have the special drip for Cornerstone, or some brokerages might have lower maintenance than E-Trade, but they might not have the special drip for Cornerstone once again. So you have to weigh these pros and cons, and the best way to do that is at the Discord chat room. So stocks can lose. That's why I put a bulk of my money in Cornerstone and Defiance, and Cornerstone's 30% maintenance. Defiance is 50% maintenance, so I balance the two there to preserve as much equity as possible. So I don't want any unnecessary drag on Tesla up front here, because perhaps we're at the bottom of a new uptrend. If we go lower in Tesla right here, well, again, I don't mind because the dividends cash flow all losses anyway, and it fits the percentage that we need to have exposed to the indexes, as Tesla is a large part of them, as I just showed you before on the Zacks website. And I like to live and die by the indexes, okay? The indexes never lose, so if you can't beat them, join them. So that's why I own mostly Cornerstone and Defiance. I also own Yieldmag and Yieldmax, but I keep smaller amounts in them because they're not the complete index. So this is the appropriate amount for me to strangle in TSLY to start, okay? For every 4K I put into TSLY, I'm putting 500 to 1,000 in Crash, and hopefully this strangle will work whether we go up or down. If we go up, I stand to win from TSLY, and if we go down, well, the dividends will cash flow from TSLY anyway, but our Crash position will help on the downside as well. And if we go sideways, well, then the dividends from both will just cash flow our investments almost for risk-free money if you think about it. And also, we don't know how Crash is going to work, so I'm going 4-to-1 in TSLY and Crash, and we'll see how that goes from here. I'll update you with my findings. If you want to follow my portfolio, just click the join button on my wall, or I'll link that in the description below. Okay, and if you need help living the FIRE lifestyle, just email me for my e-guides at akintodd48@gmail.com. When you buy my e-guides, Discord is free for life, as well as my phone number, and most people buy my e-guides and then join my portfolio service after to stay with me on the FIRE journey. All right, and if you like the video, click like or subscribe, and I'll talk to you soon, everyone. Thanks.